There's a couple of really interesting findings with regards to SoFi in the market right now. The company released some news, and there's been news on the macro, and there's a couple of catalysts that we should be looking out for going forward. And in this video, I just want to share some of my raw thoughts around everything that I'm seeing in SoFi since the earnings report came out on Monday. So first and foremost, there was a couple of low-hanging fruit, just pieces of news or company actions that I called out last week or on the earnings call on Monday. The first one was as a result of the Fed raising rates last week, SoFi would be raising their APY as well, which they have done. They raised their APY from 4.4 to 4.5%. Neobanks right now I'm seeing are competing a lot on APY. And the reason why is because many legacy players just remain fixed at 0.1%. But SoFi, by contrast, is passing those benefits down to their end users, which is definitely a testament to their brand and to their entire mission statement as a whole. So the APY raise was a pretty low-hanging fruit that I thought would happen. The other low-hanging fruit that I mentioned in the earnings call live was analyst upgrades. In my previous video, I talked about the BCIG downgrade to $13, the Truist upgrade to $16, and of course Wedbush reiterating to $3. But since my last video came out, I think 2 days ago, more analysts came out with upgrades. Mizuho, Dan Dolev is the most prominent one, upgraded SoFi based on this earnings, I think to $15. I'll put it up on screen. I also just wanted to address a comment that I got in my previous video where I did the full Q2 earnings breakdown. If you haven't seen that, definitely check that out. I run through all of the numbers. The comment basically asked around me selling SoFi now that it's ran up into the $11 range. And I've been talking about SoFi for a while now, and there's new people that are coming into the channel every day. I realize that, and some of these people are, checking out the video, subscribing to the channel. Sometimes I get comments like this one, asking me if I'm gonna sell or if I'm trading. And I know the market has been retracing over the past couple of days. I mean, Fitch downgraded US debt, which obviously is affecting the market as a whole, and I understand why. Interest expense on US debt is about to hit a record $1 trillion this year. The S&P 500 has now erased, as of this morning, around $820 billion in market cap since the downgrade. Meanwhile, the 10-year note is at its highest level since October 2022, before this entire macro downturn happened. And a couple of people that I've been seeing on the news came out and they said they're not worried. I mean, Jamie Dimon was one of them, Warren Buffett was another one, but these are also people that are buying the 10-year treasury. I mean, what else can they say? Yes, you should panic. On the macro, especially in the short term, we could definitely see a deeper retracement from here. It's definitely a possibility. And if it does happen, SoFi is not going to be impervious to that fact. Ultimately, the stock shot up by its own merit because the company is executing on good earnings reports, but in the short term is going to get dragged down by the rest of the market. So, and in fact, SoFi might even fall harder than some of these other names just because of how much they ran up, right? SoFi broke 52-week highs after the earnings report on Monday. Obviously, this comes with people taking profits. It comes with people trying to scalp, trying to trade their way in and out of the stock. And with those kinds of momentum traders or short-term traders, there comes a couple of comments like this one asking if I'm going to be selling out. And I understand the sentiment. I have a large SoFi position. It's about 20% of my portfolio. And while I could do very well if I sold at this point, I'm very much in the green on SoFi. I think my cost basis is like something like $7. I'm confident in the underlying company for the long term. I've been holding SoFi back in 2021 when it was $20. I was also holding SoFi at $4 and adding as much as I possibly could, and will be maintaining my long position as well as my leaps, as well as my options contracts for the foreseeable future. Obviously, the contracts are more likely to sell sooner than later because there is a time expiration on those, but the long position I plan on holding for a couple of years at the very least, simply because, number one, I'm not timing the market. I'm playing a fundamentally different game, right? My time horizon is longer, and as a result of that, I can ride through some of this volatility. And also number two, because the underlying company is proving every single earnings that they are consistently executing on their growth strategy. And my bull thesis for the company, the reason why I initially started investing, is playing out the way I see it playing out. I also wanted to chat through some interesting catalysts which I've been seeing in the news, and I think could be a potential huge for SoFi. One of my favorite metrics that was mentioned in the earnings call, which I discussed a little bit briefly in my previous video, was the unaided brand awareness metrics, which had reached high single digits. Having a large unaided brand awareness is beneficial to the company. And the reason why is because it not only builds overall awareness with people, in other words, the company has to do less in terms of sales and marketing spend to win a potential user. It's a lot through word of mouth and it's a lot through just association, but it also builds trust with these people, right? To a certain degree, high awareness, when you pair that with high satisfaction for your product, reinforces that brand trust and builds brand loyalty. If I don't know a brand, but I know that a lot of people are very happy with it, and I know that a lot of people are talking about it, then I'm more likely to try it than if that weren't the case, right? I think that's a no-brainer, just logically speaking. I think moving forward, unaided brand awareness is going to become a bigger and bigger metric that's going to play a huge role into SoFi becoming a top 10 financial institution, especially since that awareness flywheel plays perfectly to one of SoFi's core moats on the user experience side, which is their ecosystem benefits that is powered by the increasing amounts of cross-selling. Now, I mentioned in my previous video where I broke down the Q2 earnings that the current average member per product ratio was 1.5. This is going to be a key number to monitor going forward with regards to the flywheel, especially in the context of that brand awareness, which then funnels into that ecosystem benefits, which means that 1.5x members to products ratio, I would be looking for that to gradually be going up as the company, number one, introduces more products, and number two, keeps executing, and number three, increases in brand awareness. And one of the big events that's coming up is this Taylor Swift Eras Tour that's going to be happening at SoFi Stadium. Now, SoFi Stadium has hosted tons of huge performances, including the Super Bowl, BTS. It'll also be hosting the Olympics, I believe, in 2027. But this Taylor Swift tour is absolutely huge, and especially if you consider the demographic of people who will be attending during those days. And it got me really thinking about all of the publicity that's going to happen, all of the social media posts that's going to happen, just content that's going to be created as a result of this. And in the context of that brand awareness, this is massive, right? Because you could just by association see the SoFi logo, the SoFi branding everywhere. LA Times actually made an article where they mentioned that the tour was going to be sold out for 6 nights at SoFi Stadium starting on Thursday, and that this was going to be the tour's first US leg and its longest stay in a single city. They concluded by saying that the tour is going to turn Inglewood into the most TikToked place on the planet. So we know that SoFi has a brilliant marketing strategy, whether that is just putting their name on SoFi Stadium, whether that is the SoFi Money Moves campaign that reached billions of impressions earlier this year, or this, women in finance advertising that also helped them in terms of awareness. This Taylor Swift tour is no different. It's gaining a lot of publicity. I mean, I just saw articles recently about Taylor Swift paying out millions in terms of bonuses, just paying off people's retirements, paying off people's homes. And then that name is associated with SoFi as a whole. And especially if you consider that SoFi is just going to be tagged in all of these posts, the location of SoFi Stadium is going to be tagged, hashtag SoFi Stadium, all of those things. It's going to get SoFi trending among that demographic of people, which is exactly the demographic of people that SoFi wants to be capturing. And then the other thing that I was thinking about was, think about all of the member perks that SoFi offers for its members in the stadium itself, right? So if you think of preferential treatment in terms of when you're actually at the stadium, or maybe priority treatment when you're buying tickets, all of the different opportunities that SoFi has to leverage their in-person experiences for their members. That's going to create a lot of buzz as well. People will be more willing to try out a new product because of that association. Now, obviously that might be a stretch, but in terms of unaided brand awareness, I think that that's really an interesting factor that we can see increasing that flywheel even more and making SoFi more of a household name across the younger demographic. I've also been seeing other fintech companies as they're reporting earnings this week. I mean, PayPal and Robinhood I saw yesterday, and especially after having a few days to digest SoFi's earnings in general, I think it's interesting comparing them to other names. The earnings look even better when you put them side by side with what some of these other companies are reporting, because this is anecdotal, but back in the beginning of the year, I was seeing SoFi really being compared very heavily to Lending Club. And now more recently, SoFi is being compared more and more to Robinhood. I mean, we've talked about the UI of Robinhood, the SoFi Invest platform as a whole, and it seems as though with every subsequent quarter, that those comparisons are slowly being decoupled. I mean, you can still make the comparison from a user experience perspective, don't get me wrong, but just looking at the member additions between Robinhood losing monthly active users, SoFi gaining users on their invest platform, that's a very simple example. My point is that given enough quarters, SoFi is going to decouple itself from all of these competitors simply by the fact that they are consistently executing and beating out targets and expectations consistently. And not a lot of other players are doing that in this space. And so SoFi is going to, in some degree, carve their own path to success, to becoming this large brand name simply through their execution and through this ecosystem of cross-selling. And these are all just things to consider, right? Especially if you're a long-term investor looking at the underlying company. And if you are a long-term investor judging the underlying company as opposed to the stock, I think that the earnings report gave you a lot of little nuggets of information that you can then use to frame your arguments differently from a catalyst perspective and from, what your expectations are going forward. But I just wanted to hop on and share these thoughts while they were still sort of mulling around in my mind. I think from a short-term perspective, SoFi can fall and be dragged down by the macro, and that's fine so long as the underlying company is consistently executing. And I think that that's the wider point within the context of this unaided brand awareness as a whole. But now I'm rambling for right now. This is the Fundamentals Investing Podcast. If you haven't yet seen the Q2 earnings breakdown, I highly suggest you do that. I go through all of the numbers broken out by the business segments. I will see you in the next video.